Hey guys, what is up? Welcome back to my Robinhood portfolio. As always, hope you guys have been having an awesome weekend. Where I'm at, weather's been absolutely spectacular. Was able to get on my bicycle today as well as yesterday. Did about 50, 60 miles each day. Up in the mountains this time of year is beautiful biking weather. Nice and cool, no bugs, and the fall foliage is absolutely spectacular. So, awesome time to bike. Hopefully we get a couple more weekends in like this before winter comes in earnest. Having said all that, let's go ahead and jump into my video. What I'd like to talk about today is this idea of market timing as well as the 2016 presidential election and what kind of impact that'll have on the market. So as you guys remember from some of my prior videos, I've been holding cash on the sidelines until the election is over, with this idea that the election is going to bring a lot of volatility in the market, maybe even a little bit of a downtrend. And I guess what I was doing is indirectly advocating for this idea of market timing, which I definitely do not think is a moneymaker. I do not think this is a worthwhile strategy to pursue. Essentially, market timing is trying to get into the market when you predict the market's going to downtrend, buying stocks at a discount and then holding those through that downtrend until it starts getting back some of those losses and then selling off, or just holding for the long term. Again, I don't think this is a great strategy to do. If we just take an example here, this Noble ETF here, market timing would say, let's try to buy in this period here, and then the market will trend up and it'll make quite a bit of money. I don't really advocate that. It's really hard to time the market. If the market could be timed, everybody would be doing it, right? Professional traders would be doing this on a consistent basis, which I don't think can be done. It's better just to, buy here, sort of dollar cost averaging, or you can do dollar cost averaging as well. Putting a certain number of money into your stock with adjustment for what the price is for the stock. The simple way of doing this is just dollar cost averaging, putting 100 in here, putting 100 in here, putting 100 in here, so on and so forth, knowing that you're going to make less of a return if you put money in here than here. But if you do that on a consistent basis throughout the cycle, you're basically hedging your buys there. So if the market turns up again, now you're making money on the uptick as well. So very hard just to time and put $100,000 in here. Better to put in 10, 10, 10, 10, so on and so forth. You're sort of hedging against downtrends as well. So having said all that, what's the 2016 presidential election going to do? Well, as we know, November 8th, this is within 2-3 weeks here, the election's going to be happening. Donald Trump, Hillary Clinton. What's that going to do to the market? Well, like I said, this is essentially trying to time the market based off the information that there's going to be some volatility in the market with the election. Looking through some of the literature and articles I found, historically, presidential elections, for the most part, have had little impact on financial markets. Yeah, there's been a little bit of turbulence surrounding the election. That could equate to, a small blip, but over the long term, really hasn't done much at all. And most of the articles were saying that no matter who wins, the president's economic policies, for the most part, won't be fully enacted. Presidents don't do things unilaterally. They have to go through Congress, and a whole series of checks and balances within the government. So no matter what they're really advocating for, it's really hard for them to fully enact all of that. And, for the most part, markets should be efficient. So a lot of, the expectations from whoever wins the election, and also with, the volatility around the market, should already be priced into the markets for the most part. Some may disagree with that, but for the most part, a lot of that should already be priced in the markets. I kind of disagree, because as we know, with the talk about hiking the federal interest rate, there's a lot of movement in the markets surrounding those announcements by the Federal Reserve. So I'm not too sure the market is just going to be fully expecting what's going to be happening with the election here with regards to having stuff already priced into the markets. I think it's going to be very volatile. But again, having said that, the research shows that for the most part, this has no impact on long-term investing goals. Yeah, and like I said, candidate positions, presidential policies, no matter who wins, it's going to be very hard for presidents to do anything unilaterally. So I don't think there's going to be a lot of difference between Donald Trump's in office versus Hillary Clinton. A lot of you might disagree with that, but again, the market should be efficient. A lot of this should already be priced into the markets. So yeah, having said all that, I think I'm still going to be holding a lot of cash until November 8th when the election happens, and maybe a week after that as well. I might jump into some stocks that I see would be good long-term fits for my portfolio. Again, based on what I've read, there shouldn't be a lot of difference between doing that now, buying stocks now versus later with regards to market timing. But again, I'm going to try to I'm a new investor here, haven't been through an election cycle before, so I'm going to try to wait, hold some cash, and then buy after election, trying to buy when maybe things are a little bit cheaper with a lot of hesitation in the market. Again, that's probably market time. Well, that is market timing. That's probably not a great long-term strategy. But again, I'm a new investor here, playing around with Robinhood. The whole point of this account is to learn, to get discussions going about investment strategies, what you guys are doing, what the best long-term strategy would be. So yeah, having said all that, what do you guys think about the 2016 presidential election? Is this market timing? Is this just wise investing? Is this just kind of rebalancing the portfolio and making sure that you take into account some external variabilities that can be predicted? Or like I said, is this just pure market timing here? So let me know. Yeah, so that's just what I wanted to talk about this video, this idea of market timing, presidential elections, and let me know what you guys are doing. Are you holding money on the sidelines? Are you rebalancing? Are you shifting to more safe investments now? Or are you simply just kind of holding through the election and not really worrying about what happens with who's going to win or any of the volatility surrounding the market? Let me know. So yeah, as always, make a few comments if you have any ideas about that. Again, I'm a new investor, and any advice would be greatly appreciated. So again, if you like my videos, you're not a subscriber, think about subscribing. A like, share, really helps the channel out a bit. And again, if you have any comments for me, leave it on the video or just send me a personal message. Either way would be greatly appreciated. So having said all that, we'll see you guys next video.